Welcome to The Explainer. Today we're looking at a really fascinating day on Wall Street. One of those days where on the surface it looks like absolutely nothing is happening. But underneath that calm, there is a ton of tension. The entire market is basically a coiled spring, just holding its breath for one single event.
So let me ask you something. When you see the stock market barely move, what's it really telling you? Are investors just, bored? Is it apathy? Or is it the quiet before the storm?
Check this out. This single number kind of says it all. This was the pre-market change for Dow Jones futures on September 15th. Not really up, not really down. I mean, it's almost perfectly flat. And that stillness, that's the real mystery we're going to unpack today. This is a market in suspense.
So, what's the deal with this strange calm? It's not like every trader in the world decided to go on vacation at the same time. No, the entire market is collectively hitting the pause button, waiting for one single massive piece of information that could honestly change everything. And this whole wait and see thing, you gotta understand, this isn't passive. It's not people just kicking back. It's actually a state of super high alert. Everyone is on the starting line, poised, ready to make their next move. But nobody wants to flinch until they get the signal. And that signal that everyone's waiting for? Well, it's coming from one place and one place only, the U.S. Federal Reserve. Right now, they are the main character at the very center of this whole financial drama. Okay, so get out your calendar because two dates matter more than any others right now, September 16th and 17th. These are the days circled in red on every single trader's calendar. This is when the Fed's committee gets together and announces its huge decision on interest rates. And this is where it gets kind of wild. Look at how certain the market is about what's going to happen. This isn't a 50-50 guess, it's not even a 90-10. The market is pricing in 100% probability that the Fed is going to announce a rate cut. In the market's eyes, this is already a done deal. So think about what that means. The whole debate has completely changed. It's not a question of if the Fed will cut rates anymore. Nope. The big question now is how much are they going to cut and how fast? Economists are already looking way ahead, forecasting cuts of 50 to 75 basis points by the end of 2025. So why is Wall Street so completely convinced a cut is coming? I mean, 100% is a huge call. To get it, we kind of have to put on our detective hats and look at the exact same economic clues the Federal Reserve is analyzing right now. Okay, first up, clue number one, inflation. The Consumer Price Index, or CPI, is sitting at 2.9% year over year. Now, that number is a huge deal. It suggests that the Fed's previous rate hikes did their job. They've cooled down inflation, which gives them the green light, the room they need to start easing off. All right, clue number two comes from the bond market. The 10-year Treasury yield, which is a big benchmark for borrowing costs, has dropped to around 4%. This is basically the bond market placing a massive bet that the Fed is going to have to cut rates to help support the economy. And that's not even all of it. We've got a whole bunch of other signals, all pointing in the same exact direction. Consumer confidence is down, more people are filing for unemployment, old job reports have been revised lower, and manufacturing is still shrinking. I mean, you add it all up, and the case for a rate cut is, well, it's pretty darn strong. But here's the thing. Even with the whole market on pause, if you peek under the hood, things are definitely not standing still. There's a really fascinating split happening between different sectors of the economy. And this lays it out perfectly. On one side, you have the high flyers. Technology and AI, they're just soaring, pushing the NASDAQ to record highs. But then on the other side, investors are actually pulling money away from the traditionally safe defensive sectors like healthcare and materials. It's a classic risk-on move, all in anticipation of lower rates. And then you get these incredible outliers. In the middle of this flat, sleepy market, you've got a company like IonQ, a quantum computing firm that just explodes. It surged over 18% in a single day. It's an amazing reminder that even when the overall tide is out, there are still these powerful individual waves being made. So, this all brings us to the million-dollar question, right? The waiting game has to end. What happens when it finally does? After the Fed makes its big announcement, where does the market go from here? Well, analysts are basically gaming out two main scenarios. The first one is the dovish rally. This is the happy path. The Fed does what everyone expects, they signal cuts are coming, and boom, the market takes off. But there's a second, much trickier path, the weakness pullback. Now this one's weird. Here, the Fed cuts more than expected, which could actually spook investors into thinking, whoa, is the economy in way worse shape than we realized? But despite that little bit of short-term drama, the longer-term view from analysts is still pretty bullish. They're seeing the S&P 500 possibly jumping to 6,600 right after the Fed's decision, and then continuing its climb towards 6,700 by the end of the year, mostly driven by that incredibly powerful AI trend. And that leaves us with one final provocative thought to chew on. With a rate cut already 100% priced in, the market is expecting a full-on green light to rally. But maybe the biggest risk isn't a red light, which nobody expects anyway. The biggest risk could be a yellow light, a signal of caution from the Fed that just says, slow down. And that could catch this very, very optimistic market completely by surprise.